Alright guys, so everything is breaking apart and let's talk about the chip war today. China is now making very bold plans to decouple completely from the US. When it comes to the most advanced semiconductors like AI chips, the US is ahead of the game. But here's the issue. China is moving to close the technology gap and they are willing to burn the boats to drive innovation. China is telling companies in the country to stop buying chips for Nvidia. They want their local companies to go local and source their chips from domestic suppliers. The mission here is very simple. Start building up local semiconductor champions like Huawei to reduce dependence on the West because all China is getting is slower and less efficient chips. This is very big news. The Chinese government is now targeting Nvidia, the most advanced chip giant in the world. This economic war is being fought on many fronts. The most obvious is a subsidy war, but Beijing is now moving to squeeze revenue directly into US semiconductor giants, deny them revenue from China to slow down their own innovation, while ramping up sales for your own companies. Despite the US curbs, Nvidia still relies a lot on Chinese money. For FY 2024, China accounted for $10.3 billion of Nvidia sales. That is equivalent to 17% of global revenue. This is a very big chunk of money Beijing wants to cut off. In a weird way, China agrees with the Biden White House. Let's move to cut away chips from Nvidia. We'll innovate ahead and we'll create our own. And if this comes to pass, Nvidia's biggest market will forever be the US. And this is going to throw a wrench into Nvidia's plans, and of course, that will be very bad indeed for Nvidia's stock price. Valuations might start crashing down to earth if Beijing goes through with this. Nvidia plans to make $12 billion from AI chip sales to China alone. That is despite US trade restrictions. Chinese companies are the biggest consumers of chips. Even Jensen Huang can't ignore this market, especially to keep Nvidia at the top spot. The problem with protectionism is that it never works long term. Chinese engineers have been working day and night to bridge the technology gap. The Wall Street Journal confirms this. Huawei is on the brink of introducing a new chip, the Ascend 910C. That's comparable to Nvidia's H100, the chip that the Biden administration has blocked to China, one generation from Nvidia's latest Blackwell chips. And that means China isn't really a decade away. They might just be 3 to 5 years away from catching up. But what's frightening is the level of demand for this 910C chip. Local Chinese companies are rushing to buy it. ByteDance, Baidu, and China Mobile, they are looking to get Huawei's new chip as soon as October. Upon release, orders could surpass 70,000 chips with a total value of $2 billion. It's no coincidence Beijing is directing their companies to dump Nvidia and buy local now. The timing is not coincidental. Now, Huawei's plan is very simple. They want to fully squeeze Nvidia's A100 out of the Chinese market, and that is the most high-tech US chip Biden allows China to buy. And once Beijing reaches technology parity, it's game over for US firms. Philip Wong, the chief scientist at TSMC, lays out the end game. The moment Huawei bridges the gap, the entire Chinese supply chain kicks in.
The only thing that I see that the US is still a little bit ahead is in coming up with the new ideas. What the Chinese always say, going from 0 to 1. Any new ideas that we come up with, once they become known, this is a good idea.
The next week it will show up in China.
It will actually show up in China. Not only that, they do it better than you.
Yeah.
I cannot compete anymore. They have better resources. They have more students. They have more funding from the government. I cannot compete anymore. I have to get out of that field.
Really take a moment to absorb this. Chinese supply chains are the best in the world. You have cheap energy, you have skilled labor, and the critical raw materials, they have it all. And let's not forget the billions of government spending China is dedicated to. They have created a $47 billion fund just for semiconductors. And guess who are the shareholders? The Chinese banks. They are not going to collapse. And let's circle back to what happened 2 weeks ago. China fired the stimulus bazooka, which includes lowering interest rates. Raising money for funding is even cheaper than ever before. Beijing telling companies to buy locally only accelerates this. As fewer Nvidia chips get sold, companies like Huawei gets more revenue to invest. In 2023, the EU conducted a study of semiconductor research and development. Huawei invested over 20 billion euros in their R&D last year. The intensity of this investment works out to be 25.2%, and that means for every $100 of revenue, Huawei reinvests $25 into innovation to make better products. Nvidia, however, only put back around 8 billion euros worth. Their R&D intensity was 14.2% at the bottom of the list. On a base level, Huawei has more money than Nvidia for research and development. They can run faster and eventually catch up. That's why Biden's semiconductor curbs won't work. It only forces China to run even faster. Once they catch up, they'll start mass producing chips at prices that the US can't compete with. Even if Trump or Harris sanctions Chinese chips by raising tariffs, it won't work. Huawei will simply sell to the global south, the BRICS nations. These are the fastest growing economies in the decades to come. While China's fortunes are rising, America's biggest ally, Japan, is facing economic hell. Their stock market is cratering once again. Japanese stocks are dropping by nearly 5%, and it's because of the new Japanese Prime Minister. Kishida is heading out, and with the ultimate wildcard coming into office. And here's how crazy things are. Ishiba, the incoming PM, is an Asian NATO backer. In other words, he wants the West to be more involved in the Indo-Pacific. He loves the idea. This is very bizarre, but let's talk about the economic implications first. Ishiba is also backing the Bank of Japan's plan to hike interest rates further. Now let's not forget what happened in August. The BOJ they hiked rates in July, and that led to the stock market bloodbath a week later, right? Everything was crashing 5 to 10%. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. There's a lot of uncertainty in the world today. We have geopolitical chaos and the values of fiat currencies getting debased. Inflation is not gonna end, and that's why I consistently buy gold to preserve my wealth. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. And with Ishiba in office, the BOJ might have even more leeway to hike rates further up. The problem here is the yen carry trade isn't nearly done yet. We can see the Fed funds in black is starting to drop fast, from 5.5% to 5%. At the same time, Japan has taken rates up from negative to positive 25 basis points. As the Fed continues cutting rates down and as Japan raises theirs, it forces a selling of assets. It's not just the yen carry trade unwinding that spells trouble. The problem with low interest rates in Japan is that everyone is chasing yield, everyone is speculating now. From banks to pension funds, investors are borrowing money in yen to buy risky assets. If you are a Japanese investor, it makes a lot of sense. You can borrow at nearly zero interest rates, and you can pile into Japanese stocks. As the yen continues to collapse, it helps to push asset prices higher. And here's how crazy this is. 70% of retail trading in Japan is made up of margin trading accounts. People were borrowing lots of yen when interest rates were low and piling them into the Nikkei. they were buying a ton of Japanese stocks. So now we have a oh no moment. Ishiba himself is the black swan event. Now the BOJ has political backing to continue hiking rates up, and that strengthens the yen. It increases the cost of borrowing, and that's why Japanese stocks are collapsing. Investors on leverage are getting rug pulled and they are forced to sell. The Nikkei falling might just be a preview of another US market bloodbath. We know for a fact that the Fed is going to bring rates down to at least 3 or 4% in the next 12 to 18 months. That fact is undeniable. If the BOJ raises rates in tandem with the Fed dropping theirs, this could lead to disaster. We might see another big exodus of money out of the yen carry trade. Over the past decade, a ton of money from Japan has gone into international investments, and of course, the most popular are US stocks. There's nearly 500 trillion yen sitting overseas, and that's well over $3.2 trillion. Japan itself is one gigantic carry trade, and this isn't counting investors in the US borrowing yen to buy stocks as well. So the amount of leverage is still very incredible. The Japan Black Swan is still circling up there. We aren't done yet. But the bigger issue we must talk about is Japan's relations with China. Now, Ishiba's idea of an Asian NATO is really wow. Washington calls it a fantasy, and even the US is afraid of committing to the idea of establishing such an alliance in Asia. It would be an outrage to China, and the US being afraid really tells you something. As we know, Beijing is easing their economy as well, so growth will be on a tear. But Japan is exiting the Chinese market. Their timing is very, very horrible. Japan's direct investment into China has dropped like a rock. It has gone from nearly 2 trillion yen down to 600 billion last year. And this is a crazy drop of at least 60%. Many companies today they are figuring out the harsh reality. If you want to sell to the Chinese market, you need to manufacture stuff in China itself. That's the only way to bring down the cost of production and compete with local Chinese companies. Japan is trying to decouple with China, but if they don't sell to the world's biggest growing market, who else will buy? The US themselves are going full protectionism as well. And here's how important having good relations with China is. Since August last year, China cancelled Japan's exports of seafood because of the wastewater debacle. And because of this, Japanese food exports collapsed. In just 6 months, total food exports to mainland China fell by 44%. That's a lot of business cut away because China simply said no. They are the biggest buyer of Japanese seafood. So if tensions continue between Tokyo and Beijing, if an Asian NATO really comes to pass, China will clap back. And just like how Beijing wants to cancel Western chips, they could also import less from Japan. So what we are seeing is deglobalization, not just from the US but from China as well. The US is trying to protect their chip technology and China wants to protect their own domestic market. And things will only escalate from here. Beijing is telling their automakers to keep their EV technology in China, which means key parts of the car will be made in a Chinese factory. Even if BYD has a factory in Mexico or Turkey, they would basically be assembly plants. The bulk of manufacturing will be done within China itself. The government wants to protect their technology and the know how. They don't want the expertise and the tech getting leaked out to the West. And guys, this is just a start. China will be developing their own chips and they're going to protect their EV sector as well. Sooner or later, the world will get chopped up, split into different trading factions, the BRICS, the G7, and the non-aligned. And that will be the new global order. But let me know what you think. Can China develop their own high-tech semiconductors? And will Japan blow up the global stock market once again? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.